Hello everyone, how's it going? So today, Aaron and I will be talking about a stock presentation. We'll be talking about Ford Motor Companies. Really excited to talk about the positive things about Ford. Aaron will be talking about the negative things that Ford has going on. So yeah, let's get started. So a quick overview of Ford. So Ford was founded in June 16, 1903 by Henry Ford himself. It currently owns divisions like Ford, Lincoln, and Motorcrafts. It is an automobile manufacturer. It is the second largest auto producer of cars and trucks in the United States, just underneath General Motors. As of right now, it currently has 190,000 plus employees working for them. For a company that has been around for 117 years, great. The stock. So let's talk about the stock value. When it comes to the stock value, so as of right now, from when I'm recording, the stock is currently going for $9.22, which has been a fantastic increase for those that own Ford stock right now. And I'll tell you the reason why. So during the pandemic, it hit a low of $4.01. That is the lowest the stock has gone, especially during the time of the pandemic. It is a large cap value investment style. In the past 3 months, we've seen a 30.50 increase in the stock, so $2.16. In the past 10 months, we saw a 129.93% increase, which going from $4 to $9.22. That's a pretty big margin. So for those who bet it, like myself, for Ford, I know I had a couple talks with friends and stuff like that about Ford. Some people said it wasn't going to go down. I kind of played it safe after doing my research with Ford. I definitely put a lot of research and thinking about when I decided to Ford. I saw the CMO investing over $1 million in the Ford company, the Ford stock itself, as a safe bet, knowing the fact that he himself also believes that the stock will rise and will go higher than what it normally goes. So reasons for its rise. So during this pandemic, there's been going a lot. There's been a lot of movements going on, a lot of new strategies, and I can tell you right now that 2021 seems like a bright side, really bright side for Ford, and we might see some really amazing things coming for Ford. So let's start off with the first thing. So Ford in October announced they got a new CEO, Jim Farley. Jim Farley wants to reduce rising warrant costs, so it seems like these warrant costs have been a big issue with Ford and the previous CVO. So the fact that he wants to eliminate those will definitely help out the company itself. Another thing they announced was a new CMO, Susie Deering. Susie Deering has been having had from what I've read, she was working for, I believe, for Google as their marketing officer. And she's done great things with the company and kind of gave it what it is. So seeing someone like with experience like Susie Deering in Ford, I mean, it just creates a lot of excitement and to see what she has to offer and what she could do for Ford. Another thing that that Ford announced is their new versions of the F-150 pickup and the Bronco SUV, which are expecting to bring high margins in 2021. So I get it, Ford, from what we've been hearing, is that they're trying to eliminate their cars and just focus in trucks and stuff like that. But I mean, on the bright side, we could definitely see some really good margins coming out of those. Another thing that I really wanted to mention, I'm really excited about this one, is that they decided to join with Rivian to create an electric battery technology. So the future of Ford. So I'm personally excited for what 2021 has to offer. So we can expect Ford to be a stock to get going into 2021. Ford is only focusing on its trucks and SUVs with an emphasis on electric cars, knowing the fact that they've joined with Rivian. The aspect that they got a new CEO and a new CMO, so bringing new faces into the company will definitely help out the company grow. The highest the company has gone reached in 5 years is 1454. I guarantee. My prediction is in 2021 we might see Ford rise and pass the 1454, and we might see a new mark. If they do decide to go for electric cars, we might see what might be the what's it called the deal breaker, since it will be competing against companies like Tesla or any other company that has electric cars. And the reason why is Ford is well known for having less expensive, not to not use the word cheap, less expensive cars, so less expensive options, which if it's true that they want to eliminate gas cars and want to go into more electric cars by 2030, I think 38 if I'm correct. We might see Ford probably being one of the companies that you want to put your money into, just because more people would buy something less expensive than something more expensive, in terms of economic wise, And that's my part of the pros of Ford. I will be passing it to Aaron, who will be talking about the cons of Ford.
Thank you, Eric. Hey guys, this is Aaron. I'm going to be talking about the Ford Motor stock analysis on the bear side. Quick overview. We are going to be looking at some of their current affairs, their past performance, as well as their future strategies. We're going to be looking at their internal challenges they're facing, some of their financials, as well as some of the external threats industry-wide. And then lastly, we're going to be doing a final recommendation. So let's go ahead and get started. So taking a look at their internals, they are in the midst of a multi-year restructuring plan. Now, their overall sales have slipped 6% leading up to COVID, and of that 45% decrease in compact car sales. So just last month, they announced that they're going to be focusing on Class 3 vehicles, which are pickup trucks and SUVs, and completely eliminating several models of cars and coming out with new ones next year and the year after that. So there's a lot of uncertainty how the market's going to respond to these new vehicles, if there's going to be demand for it, if they're going to be reliable. Eric mentioned that there's a brand new CEO just hired 2 months ago, as well as a new CMO. And they were brought in to kind of clean things up, but they're right in the middle of this restructuring plan, and it could take a couple years before there's a turnaround on this return, or a return on this investment. We just really don't know. Taking a look at their balance sheet, there's so much debt, $160 billion they have in debt. Of that, 500% debt to equity ratio. Now, granted, most of that debt is secured debt coming from the financing arm or Ford Credit, which traditionally would give them interest and earnings, which would help their balance sheet. But there's a lot of anticipation that there's going to be growing delinquencies from people being affected by COVID, and that's going to hurt their earnings. So we have seen that there is a drop in revenue. There's taking a look here, their stock price has been on the decline for the last 4 or 5 years. Earnings per share has dropped. We see that their return on assets and equity has gone down year over year for the past 4 to 6 years. And their gross margin is far below their competition. So backing up, we have seen that their debt, excluding the Ford Credit, has still gone up 75% just in the last 3 quarters, from $15 billion all the way up to $25 billion, a huge jump. So, there's some major problems going on in their balance sheet. Now, their overhead is also problematic. They have 190,000 employees. GM only has 160,000, still a lot, but Tesla, under 50,000. So this is a very high expense and burden on their balance sheet. Most of these employees have pensions, retirement plans. After they stop working, they still get paid, and this is a huge factor on earnings. So long-term profitability could also be hindered by the unions that these companies belong to. Traditionally, unions have always wanted their piece of the pie, and foreign automakers and imports do not have to deal with this problem because they're non-unionized. Last year, Ford had to recall 375,000 vehicles due to a suspension malfunction, which caused drivers to lose steering control and increasing the risk of accident. And this isn't the first time. Ford is notorious for safety recalls. So customer sentiment is very low, and it's been on the decline. Consumers are starting to lose faith in the brand, the safety, the performance of their cars, and they're turning to foreign automakers, as well as new domestic companies and manufacturers. Taking a look at the external threats, there's growing competition industry-wide. Detroit automakers have been losing market share for years, decades even, to foreign automakers, and now with all of the EV companies taking over the market share, they're losing market share every year. It's not good. So Ford's trying to catch up to their competition, but they just keep falling behind. Morgan Stanley last month, they downgraded the Ford stock to a hold, and they quoted that Ford does have a sense of urgency about their EVs, but no clear strategy. So, for example, the Mustang Mach-E they're scheduled to release next year only gets a 210-mile range on a full battery, which is substantially less than other vehicles in that class and price range. EVs have doubled the past Sales have doubled the past year industry-wide, and companies like Tesla, NIO, Green Power, and others are just continuing to take up market share. So, Ford's trying to come out with electric trucks, electric vans, electric SUVs, but they are far more expensive than their traditional gas cars. So, this is a growing concern because despite the claim that there's a 40% reduction in maintenance, people are reluctant to pay, $60,000, $70,000 for a Ford. Now, the auto industry is also very cyclical. So if the economy is not doing so great, or we start to enter into a recession, the auto industry is one of the first ones to feel it. Now, on the flip side, if the economy starts to do better, there is a good chance that interest rates will rise, and that will also hurt earnings because people will have to pay more for these car payments, and financing will be more expensive to consumers. So either way, there's a lot of concern there with that when it comes to the economy. And then, over the past 6 months, since the March lows of the pandemic, Ford has actually seen a slight bump in their price, going up to, I think, $9 right now or so. So it's kind of been assessed by most advisors out there that their stock is actually ready for a breather, that they're actually kind of peaking right now, and it's very possible that they're going to it's going to shrink a little bit. So. Final assessment, we just want to reiterate that there are some short and long-term challenges that Ford Motors is facing, and a lot of uncertainty moving forward with this investment. They are facing a lot of internal weaknesses with the restructuring, with the debt, the balance sheet, not good. They have a lot of overhead. There's safety recalls. They have really low customer sentiment. And then looking externally, there's growing competition. The economy is really an X factor in that, and the affordability of their cars is in question as well. So it's our final assessment that the profitability for this company is not favorable. There's going to be limited growth, at least for the next 24 months, which is creating a lot of risk and very low potential for reward. So in my professional opinion, I would recommend that we avoid this investment option at this time, and pass on this particular company due to these reasons. So thank you very much, and have a good day.